What's going on, traders? This is Stephen Place, lead analyst at Insider Report. And if you've been watching the stock market, it's been a little bit loose to the downside. We had that little bit of a scare last Monday. It got bid up. We had a really nice bounce, and we're back to where we were on that Monday. A lot of things are not working right now. A lot of stocks are just seeing general sell-offs. We've needed a reset for a while, and that's just normal. What I'd like to do right now is show you what's working. And the easiest way to figure that out is just a very simple concept called relative strength. So all it is, if the market is making a lower low and your stock is making a higher low, that shows, first off, that that stock is not tied to the overall market and it's actually doing better than those. And those are the stocks that you absolutely should pay attention to right now. So let's hop over to some charts really quick to show you what kind of a mess we're dealing with and some things you can take advantage of right now. So this is a chart of the S&P 500. The S&P is currently trading around 4,300, just a little bit lower. We did come back to those Monday lows. It kind of looks like trash right now. I don't think we're going to crash. I think that way too many people got overhedged last Monday, but it's a little bit soft. You could also look at the Nasdaq, right? The Nasdaq also, it's been selling off. It's coming into some support, but you can see that relative to that Monday low, we put in a lower low. So what's going on here? It's just a broad market sell-off. We've got Evergrande risk. We've got debt ceiling stuff. We've got infrastructure spending. We got way too many people buying VIX options and VIX calls into last Monday's move, which truncates this move to the downside. But you also have to remember that 6 stocks make up 50% of the Nasdaq 100. Apple, Amazon, Microsoft, Google, Facebook, and Tesla. 50% of the Nasdaq. If those 6 stocks go down, the whole market gets drugged with them. Okay. And it doesn't matter how good of a stock picker you are. If your tech stock is a tech stock, it's going to move with the Nasdaq. That is how, during volatile market environments, how the market trades. 80% of price movement is directly related to the index, and that's just how it goes. Yet there is a select group of stocks that are zigging while the rest of the market is zagging. These stocks are what I would consider special event stocks, potential catalyst stocks. How are we finding them? We're looking at insiders, right? I'm not saying that I have key insight into these companies. I'm saying that all these other folks who are in the nuts and bolts of the company, the directors, the CEOs, the CFOs, they're the ones that know what's going on, and they're the ones that are willing to make a stand even though the market is up so much. They don't feel that the downside risk is huge. And in a lot of these names, they have not participated in the market's movements at all. Here's a look at the Russell 2000 index. This is small caps. They haven't gone anywhere since February. Just gone sideways for 8 months now. Within that context, from the lows last October, the Russell 2000 rallied 50%, okay? And then we just went nowhere after that. So there is the potential, if this sucker breaks down, I don't think it will, but it might, for it to take out a lot of names tied to that, okay? Biotech names, regional banks, things like that. So you just have to make sure you know what you own. Okay. I also want to point out that we've seen a higher low in the Russell. And this is directly related to some other macro stuff with respect to rates. We're seeing rates rise. That actually helps small caps. And so that's why there is a distinct outperformance right now in the Russell relative to the Nasdaq and the S&P. Many of the names, basically most of the names that we look at within Insider Report, tend to be smaller capitalization names, and they can run march to the beat of their own drum. So let's take a look at a couple examples. This is a name where we have seen consistent higher lows in the stock. It's a very low float stock. It has the potential to be purchased by some of its bigger competitors, which are something like 10x the size of what they are. Last month, we saw $163,000 worth of shares bought from insiders. Then we saw another $87,000 bought. And then one more, I think it was a director, just snuck in and threw 10K in there. You can see that even though the market looks like hot garbage, this made a new 10-day high today, and this has the potential for a catalyst to push it up 50% at least. It could be a double. If it goes back and retraces back to the June highs, then we're looking at a move from $3 to $7.50. So that's a double and change. It's not bad. It's going to be a lot more on the option that we've selected as well on this one. Here's another example. This is going to be in a larger cap tech stock. All right, so it's a tech stock. It is not rolling over too much. It actually finished green. We had a big player pick up $460,000 worth of stock back in June during its first nasty earnings event. It had a second nasty earnings event, and then the same dude bought $1.7 million more worth of the stock. Someone knows something. All right, we've got a key gap fill coming up in that. And if we see a push, the stock, I think, is about 30 to 40% with upside, and our options will be multi-baggers if we get the move we're looking for. Here's another one. This is a small cap biotech stock that just had a turnaround story. They had activist investors come in. Once the new CEO was installed, we had 432,000 shares bought. $432,000 of this stock purchased from 4 separate insiders. Some of those came from the activist board seats as well. All right, look how it's traded. Right? It's gone sideways, but it's not getting absolutely crushed. Why? Because these are not going to be correlated with the broad markets. These can act as natural hedges against other parts of your portfolio. These are things that you absolutely have to be paying attention to right now. Here's another one. CEO drops nearly $1 million into this stock. It's just incredible how this entire story on this particular name, where they had a merger, the new CEO comes in, and instead of riding off into the sunset, he goes and drops $972,000 into the stock. Look at the relative outperformance. Again, it hasn't gone anywhere yet because many times we're looking for catalysts in these names. The insiders have a pretty good idea of the kinds of catalysts that are involved, all right, and the kinds of turnaround stories and things along those lines. Yet relative to last week's lows, it's up. And we actually had a higher high and a higher low. This has a decent amount of short interest and not a lot of shares available, so this sucker really can squeeze. Right? Those are the kinds of names you should be looking for right now because they offer a little bit more protection to the downside. They're not going to be tied to Apple and Amazon and Google and Facebook and Netflix. Those names are not going to drag these names down because they're in different buckets. They're often special cases, small cap biotech stocks, small cap regional banks, small cap retail stocks, things along those lines that continue to outperform the market right now. And once we get a little bit more upside and once we get some more risk appetite involved, these can pop off any day, right? All it needs is a little bit of news. Many of these are heavily shorted, low float names that are seeing conviction buys from these insiders. If you want to see these names and if you want to see how they are trading in our portfolio, not just the stocks and the companies themselves and the stories behind them, but also key profit accelerators with the options market, which I absolutely do specialize in, you have to become a member of Insider Report. In order to do that, in order to get access to our portfolio and our option trades with it, we'd like you to take some training first. Below this video is a link to our training on showing you the best traders that you don't know about, these insiders. We'll talk about the 3 scanners you need to look at to find these profit-rich trade opportunities and the things you can do to trade them successfully and the things that we look for. Once you've gotten that training done, you can then sign up for Insider Report. And then you can get access to our stock trades, our option trades, all the research we've done behind them. And you can get in at very good prices right now with a ton of upside in these names. If you have spent the past 2 weeks being frustrated to death by the way this market's trading, where it doesn't matter how good of a stock picker you are, it's just trading with the Nasdaq. If you want a way out of that, if you're looking for better names to play that have much better risk profiles right now in this market, then you can't afford to miss this opportunity. Get trained up with us. Go watch the free training for Insider Report. Then become a member. Come join me, and I will help you build your wealth aggressively in the stock and options market. That's all I got for now. Sign up for the webinar right now, and I'll see you on the other side. Take care.